Okay, guys, Bruce with you here from Targeted Wealth Creation. All right, let me start with I'm not real happy. They did something good, but for the most part, these fund managers really blew it. Again, sometimes when you know a sector too well, maybe shame on me for thinking that one of these income funds could really do well in GDXY. Obviously, they don't know how to play precious metals and or precious metals miners. Well, it's obvious. And I'll take you through what I said yesterday and what I've been saying, and it's exactly what's happening. And due to their, hey, I get it, they got a prospectus and they're trying to, pay out 50%, and yet the IV is, 30, low 30s. Well, it's not that when this market starts to move, and there's a reason it's moving because these precious metal mining companies are about to have explosive earnings. And the market's starting to figure that out with some re-ratings and some upgrades. And you get a lower CPI. And it's exactly what I said. We were going to get one way or the other direction. I was prepared for either, but they've played it to where all they're trying to do is just reap this small bit of premium, and it's backfiring. They're getting massively capped. So let's jump in this. So, when it's so easy, thank goodness I had Newmont calls in place, right? One of the big GDX. So I'm up 250% on that position over the last, week plus. And I've been telling people about that. But again, I'm not here to teach you how to trade the metals. I'm here as a proponent of GDXY. And the reality, unless these guys get their act together, they're not going to give you. We're underneath at 1908. Look how pitiful this performed. So the market was up 2.6% in gold miners the day before, and then another 2.81. Look at this. 0.75, 0.85. We haven't even caught up to half of this. And it's all because of poor placement. They follow this principle. Well, we're just going to collect this 30% yield. And if you're going to pay us out 50%, which is a decent payout, don't get me wrong, but you're going to keep us capped. This is, going to be a nightmare if it doesn't get better. So you wonder sometimes why I'm not that happy, especially with a sector I know so well. So I do my own things outside of this, but I want to help you guys that listen to me and you came over here. Now, you're still going to get income. It's not like they messed it all up, but there's just so much growth here and so much opportunity if these guys get their act together and figure it out. But I think the market's going to have to teach them for a month or so before they figure it out, because they're not, right? They're just doing what their script is, and their script has to react to the market. Look what happened with Tesla, right? Even NVIDIA, you know, NVIDIA, that stock based on the performance of NVIDIA should be paying out $4 and $5 if they played this right, but they're not, right? They're just playing it for a little bit of income. I'm not saying 247 is horrible, but on the stock of the stock market, it should be better. And I get a sense, this is my rant, I get a sense that maybe Jay as a sub-advisor and Yieldmax will get their heads together and figure out that they need to do some kind of additional fund where, okay, we're not going to pay as much yield, but we're going to give you more growth. And they should mix it up and have different kind of offense, because if they don't figure that out, somebody else is going to figure that out. Okay, it's simple. And so if they want their funds to continue, they've had a lot of growth in their funds. I'll give them that. But you can't produce yield out of nowhere, and you can't set yourself up for failure by getting massively capped in a market that's just so obvious to anybody that understands this market sector. Okay, I've been calling it right and left when it was going to move, how much it was going to move, and yet the placement of their strike prices are just pathetic. They get run by, and I said that. I called it out. Okay, I don't know how much clearer I can do, but they don't listen to me. Why should they? So it's pretty frustrating, guys. So if you have something you want to see, just understand that's the bad side of these income funds when the market really runs. They need to figure out a different strategy. So they need another dial in that lever that they can dial back or enhance or something. Because when you get a bull market in a sector, like when Bitcoin gets running again, okay, and gold and silver and the precious metals run, and maybe the stock market doesn't run, they better get it figured out so they don't get it capped. All right, so I'm done with my rant. So we see 2.6, 2.81, 0.7, 0.85. So what did they do? They had a mess on their hands. So they had to go out and close a bunch of positions at big losses in a market that's breaking open in a bull market. So that's poor execution and poor placement of their strikes, okay? All to try and get the little 30% yield. Well, try again, guys. All right, so here's what happened. They had these 36 and 37. We're now at 38.09. It was so obvious. Okay, so something they sold for their pitiful little 35 cents, they had to buy back at 209. Okay, so they just took a huge loss on that. How many times is that a loss? A lot, right? 6 times? Yeah, about 6 times. So when you talk about getting capped, it eats everything on your synthetic long. Why even have a synthetic long if you're capping yourself so much when the bull market roars and you eat it? You can tell I'm frustrated, guys, but I was expecting a little bit better here. All right. And the market was telling them by the share buy-in that this stuff was going to move. I mean, when you come out with a fund like this, understand the fundamentals. What drives this and what's it likely to do? So, all right, I know I just keep going. So this one, the 37 just got ran by, which I knew it would. Okay. And so they paid on 38 cents, not quite as bad, 3 times, 2.5 times. But they're big losses. They didn't need to lose that much, right? They could have given up a little yield. I'd rather get a 30-cent payout because they went way out and protected the upside, okay, than overpay me 10 or 15% and just cap me in the bull market. So I made a mental note of this, and I'm sharing with you guys, okay? So let's see if they get better. They can and they should. Okay. So here we go. Let's look at the rest. So realizing that, they had to take those off. Now they left the 38 on, small quantity, right? So, but look where we are. We're already 38.09, and this is all the way to the end of next week. Now, I'm not saying that this market can't pull back to 37 or 37.5, but wait till Newmont reports. I don't even have it in front of me. I'm up fivefold on that call position, all because I know what's happening. So, anyway, that's coming, and the top could blow off here, into August. And don't get me wrong, this stuff can run up to 42 or 46 and turn around and come back, right? And maybe they'll get really lucky with this 38 and will retrace. But I doubt it all the way through 719. I really, really doubt it. So what they did is they then went, and here's the sheet. So they closed these out, right? Well, let me show you on the 36s. We got killed on the synthetics as well, right? So I'll take you through that in a minute. But here's the buy to close that I showed you on the 1950s. Sold it for 35, got 209. They had to pay 209. Sold it for 38, had to buy it back for 113. And then they went out on a 39 out next week and got 40 cents. Now, maybe they'll get lucky. Maybe it'll stay below that. Maybe it'll run to 40 and pull back to 38 and a half. So at least they're reacting. But this initial placement was just poor. I mean, you don't do that in a gold and silver market that's about ready to explode with these massively undervalued miners. So somebody just doesn't understand what they're dealing with. That's a problem here. You get some options geek who has no idea what the market's going to do. And I know what they're going to say. We only execute options. We don't try to guess the market. Well, sometimes it's not guessing. It's pretty much known what's going to happen by anybody that understands it. Okay, so let's continue. I beat them up enough. It's just frustrating, just super frustrating. So let's go look at holdings. So I took those out, right? I took the two big losses. And then I'm going to tell you what, well, let's go do the synthetics. Um, so on there, on the 37, this is the new guy. So they had to get out of the 36s, right? So when they bought these back, right, they had put it 240 more on 710 and wrote 2185 here. And then when they came in and they took these off, okay, so at least we have some money there when they closed the position, right? So they had to buy these back at, well, actually, they didn't. So they had to buy these back. Let me look at my sheet here. The 37s, they had to buy it back, or they bought that for 2 point, sorry, they bought it for 2.8 and sold it for 1.35. But they went all the way out. This is good. This is a good move. Get some synthetics and leave the, you know what, synthetic alone at this point. Okay. So they're at 37.05 on a 36 strike. And so when they buy the calls here and put on this position, they got to pay more than the puts, right? So they had to spend $6.79 and they only collected $1.45. But that's because they're already in the money. And if this thing plays out like I expected, that could be 45 or 46 come September 20. Let's see. I think we actually peak in late August and then sell off September and October in the metals and then go into a run at the end of the year. But this move in July and August will be pretty phenomenal if it does what I expect it to do. So they got 70 days out there. So I understand this position. At least they're positioned now, but it makes our pay look ugly at the moment. But if this thing runs, at least they own a 36. And if it goes 38, 39, 40, 41, we're going to be making money on the synthetic, which is where we should have always been. Okay. So now on our weekly, though, we're already, and look, it's not only a weekly, it's all the way to 719. We don't have anything left with the 712 because they had to close them all out because they had poor placement, right? They were way too close to end the money on those. And we're only 2.39 out on our big one. Now, we will make good money on the synthetic, okay? But the game isn't making it on the synthetic and then losing massively on your weekly call either, because that takes away part of the gain of being long the stock. So that's where these funds, you have to own the underlying outside of the fund if you want to participate in a very bullish sector when it runs. You simply have to. I understand some people want income, but don't take small income for where you could have big gains. I guess I'm just going to reiterate that again. All right, look, I didn't change the chart. We're over 38 now. Okay, we may consolidate here for a few days and then blow the top off. So it's more than likely going to happen. But these guys aren't positioned that well for blowing the top off, not with these puny calls. Okay, so let's look at how the holding. So we have 365,000 in cash right now because we're up, right? We're in a 37 on our synthetic, but right now that's your old paper gain. I like it. I'll take it all day long, but when I show you the payout, we look horrible because I had to spend all that money. So, and on our weekly, we're actually up on this guy, right? Well, of course we're up on it because it moved up, but the danger is we could run right by that. And on this guy, it's so puny shares, we'd have to buy it back for twice because this is 38. We're already at 38.09 and we got 6 days to go. All right, let me jump in and wrap this up on the page. So where did we close? 1892, right? 1898 is fair value here. So that's all close. So let's look at the payout. See, we were collecting money when they were getting those little puny things, but we were building up these liabilities because GDX hadn't woken up, right? The miners still hadn't woken up. Well, the miners are waking up. Why? Because they're moving into their earnings and the gold they dug out of the ground and the silver and the other minerals they dug out are much, much higher than what they had been the quarter before. And so that's going to blow their earnings out. But anybody could see this coming that just follows the raw metals. And gold's likely to go to 3,000 probably this calendar year still. And it's only at 2,400, at least 27. We'll see that sometime in 2024. And then who knows how high after that. I mean, it sees the debt levels in the country. It sees what's going on in this war climate and these massive debts. All right, guys. So 52 cents per share loss and a total of 84 cents a loss. Now, if they went out and sold those, which I don't want them to do at all, right? So the positive is now 365. So anyway, I ranted on this, but it's a particular thing for me because, had I been doing this fund, it would have been done a lot different than it's being done. And all I can do is do it myself outside of the fund with the individual miners. But it is a little frustrating when I want everybody to win here. I guess the good news is it isn't 15, it isn't 17, it isn't 9. We don't have to worry about, NAV erosion in a massive way, but there's no reason for it to be 1908. It should be well over 20 again based on how well GDX is doing. But again, if they don't execute the options that way, how can we get the price out of it? Okay, guys, that's what I got for you. Again, I'm not a financial advisor. This is not financial advice. It's your own personal rant from targeted wealth creation. I apologize. I don't mean to be so overzealous, but it is frustrating. But it is what it is. This isn't the first fund it's ever happened to, and it probably won't be the last. And I get it. They're option traders at the end of the day. They wrote a prospectus, but you know what? It's like somebody that makes a judgment and doesn't give you leeway for a special circumstance or situation. This clearly should have foretold and they should have been prepared for this. Okay, guys, I'll let you go. Talk to you later. Bye for now.